When you think about opportunities in growth technology, chances are wealth software systems have skipped you by. But in this episode of The Pitch, Fidelity's James Abela is going to take you through why you should be thinking a bit closer about wealth software systems and how to invest in this space. James, welcome.
Thanks, Sarah.
So to begin with, why do you view wealth software systems as an opportunity and what are the key drivers for growth?
Look, Hub and NetWealth are real leaders in their space. The growth is really about winning market share from the big five, so from the big four banks and then sort of all the big six, I guess, AMP and Macquarie. But they still have great technology, so it's really more the big four banks where the movement of advisors has started to take place. But it's more the fragmentation of the industry, and that industry is really using technology stack as a platform to go out and become either an RE or another separate advisor group. And so it's a real, I guess, movement of technology leadership and technology innovation that Hub and NetWealth are really giving to the market. All the others have also provided innovation. So it's a real battle for, I guess, client confidence in the platforms. So it's errors, speed, report turnaround times, all these things have become very critical in a client's mind. So I think Hub and NetWealth do have very good systems, and that's, I guess, why they're winning share. But it is, as you know, like the big six have spent a lot on technology, right? Everyone's trying to spend money on the technology or wealth platforms. And it's still a very competitive market with all of those big six players having their own offering and some, being quite successful. So I just think Hub and NetWealth are in a good space. It's a growing market. Australian wealth is a $3 trillion market. It's a huge amount of money that we actually have in our wealth system. And all of that has to be held on a software program. Has to get a report, it has to be, there's tax reporting, there's a lot of other different reports that have to be tracked, dividends have to be tracked, corporate actions have to be tracked. So there's a lot of very, very fine details, and a lot of that requires really, really good technology, so really nothing is missed.
What qualities do Hub and NetWealth have that you think are going to continue to differentiate them from their peers going forward?
There's the financial side and then the non-financial side. I think on the financial side, they have high returns, good growth outlook, and good top line growth, therefore high ROEs, high margins, and then have opportunities to reinvest capital back into their systems to create a innovation leadership cycle. That's really the financial side. On the non-financial side, it's really service leadership, entrenchment into their customer bases. There is definitely an element of trust with that whole wealth management space. This is people's money at the end of the day that you are tracking on software. So I think being a trusted source and being a high customer service provider, they're really important factors when you look at how you're going to survive over not just years but decades. And that, I think, they're the really important things. It comes together being a financial and non-financial.
What are the key challenges you think are facing key players like NetWealth and Hub?
It's the technology stack. Is definitely technology leadership is going to be the critical, because you still have the big six also innovating. So the big four banks, AMP and Macquarie, are still innovating and have very good systems. And so Hub and NetWealth need to be leaders in innovation. So it's the software development, it's the software tracking, it's the auditing. And we've seen the recent CrowdStrike kind of things. These things can really be disrupted, and it just creates a lot of confidence issues. So you've got to make sure your systems are really top notch and competitive in the marketplace. And also the fail rates or error rates are really, really low. And that's, I think, where the technology, but also the reliability of the technology and the systems and everything underneath the technology stack needs to be really, really, important and really high performance. So I think that's it's the innovation and the reliability that need to really, really hold over many years. So that's, I guess, for me, what needs to hold for them to maintain leadership.
Okay. Outside the major players, how can investors think about exposure to the growth in wealth software systems?
There isn't many beyond Hub and NetWealth. There really isn't that many exposures. Class was one that I tracked for a number of years, but that's now been consolidated into that by one of the larger players. So there really isn't much beyond, I guess, Hub and NetWealth in that wealth management space. There's only really fund managers or other sort of related exposures, but in terms of direct wealth management software technology, that's really the two that are available in the Aussie market.
With both Hub and Net Wealth, we've discussed how they're in a fairly tight pool of about 6 competitors. Where do they go next once they've gained the market share? Is global a way for them to continue to grow as future leaders?
Global is, it always is, someone who's a really strong Australian dominant technology leader can go overseas, and there is definitely potential for them to do that. It's just there's different tax systems and legal regimes in those different environments, whether it's say the US or the UK. But it definitely is possible. Financials have gone, such as Iris, have gone overseas and been successful. So I'd say it is. It is possible, and I do think it is an option for them because they do have technology leadership. The other thing is, Macquarie, especially, and BT have invested a lot in their technology. So there is, I guess, the pressure for technology leadership to maybe have a limiting factor as you go through the years or the decades. So then global growth option would open up a whole new market opportunity for them, and that would create a whole basically a whole new world of growth for these businesses. And if their technology stack is really strong, then it can be exported into other markets such as the US or the UK. So yeah, I think it is an option, but definitely the history of Australian businesses succeeding on the East Coast particularly, and then a little bit on the West, they head over to the US or the UK. There's been a lot come back with their tail between their legs, and it's been a lot tougher than they think. So that's the real, I guess, challenge that probably the market would struggle with early on. But if they do it, and it is considered to be a viable option, even through partnership, then that would be huge. So I think it is definitely something that could be considered for them. But there's definitely, there are definitely risks in that sort of path.
Thank you so much for sharing your insights today, James.
Thank you.
If you've enjoyed this interview, please subscribe to Livewire Markets. Thank you for watching.